Good morning. You're watching Ask Profit. I'm Smriti Chaudhary, and for the next 30 minutes, I'll take all your stock-related questions. So to write to us, you can either message us on the WhatsApp number that's on your screen, or you can write to us on the YouTube live chat or through any of our social media channels. So get to writing. Now, let me introduce you to the guests for today. We have with us Mr. Vineet Bolinjkar of Ventura Securities and Neerav Chheda of Nirmal Bang Securities. Welcome to both of you, and thanks for joining in. Now, before we jump into the focus and the questions, let me start off by seeing where the markets are currently at. If you look at the benchmark indices, they're extremely flat at this point. It's 0.02%. That's where Nifty 50 is at. However, it's been kind of in the red, a little bit in the red since morning. So, bit of a downturn we're seeing, but not much to complain there. Let's also look at the constituents of the Nifty 50. Power Grid is gaining about 3.8% in trade. HDFC Bank is up today about 1.8%. Grasim is up about 1.5%. From the contribution, there's just a 5-point contribution, and largely it's by HDFC Bank that we're seeing. Then there's Infi that's on the downtick, Infi, TCS, and Coal India. Now, Coal India is also one of the biggest loser on the Nifty 50 today, and that's because of the commentary from the management and the results yesterday. That's pretty much on the benchmark indices. Let's look at the broader markets as well. Nifty Mid Cap and Small Cap are both currently trading in red. Nifty Mid Cap 150 is down about 0.2%, and Nifty Small Cap kind of flattish there, but treading the territory in red. So that's the broader markets. If we can also look at the breadth of the market at this point and see what is the ratio of advance and declines. Yeah, there you have it. You can clearly see there's a bit of a choppy market right now. It seems indecisive at this point. So literally the advances and declines are pretty much merging. And that's the state of the markets right now. And but the focus for today is Zee Entertainment. Now, we have NDTV Profit has an exclusive on Zee Entertainment today, and according to sources that spoke to NDTV Profit, Zee Sony lawyers are engaging in talks. Now, this comes after the collapse of the Zee Sony merger. So and the markets are taking positive cues from it. The stock is up in trade today, and if I'm not wrong, it was touching upper circuit at 5%. That's pretty much a positive cue on Zee. But I'll come to you, Vineet, on Zee Entertainment. How are you viewing this development? Do you see some sort of... I understand there's uncertainty in the stock that remains, but from a longer-term perspective, would you suggest people to stick with Zee Entertainment if they already have the shares?
See, the primary perspective for Z2 and Sony to merge was truly to take on the competition which is coming from big boy Reliance, doing a deal with, Hotstar and Disney. Now, with that kind of ominous competition, Z, if it thought that it could survive on its own or thrive on its own, they would have not gone in for a merger. But the fact that, the merger has been called off and this thing, so it really does not portend well for the Z stock. Of course, there's a little bit of upside coming in from the fact that the stock was beaten down very aggressively, and they would possibly be looking for other suitors for their business. So until such time, I think this stock does not have too much of mojo in it, and we expect the stock to drift upwards because because the beating has already factored the downside.
Right, understood. Okay, let's quickly jump into the questions now. The first one is from Ranjit, and they're talking about Nalco. This one's for you, Neerav. They want to know what is the good price to buy Nalco. Should they buy the stock at this juncture? Should you wait for some more of a dip in the stock to get into it?
Yeah. So, see, this stock has witnessed a big breakout. This is about a 15-year breakout. This is the first time the stock has gone above the 140 levels in its history after, the 15 years. So definitely, it has a lot of legs to move up, and it should move up very quickly. So my only request here is don't look to trade short term in this stock. The volume profile is very good as well. There is a likelihood that this stock is going to go up towards the 220 to 30 odd levels in a very short period of time. So look to buy the stock even at current levels and on dips up to 150 or 145 is a very good support area. That should be a stop loss. And at 220 to 30 as well, don't look to sell. You can probably again see how the chart looks. You can ask a question again and we'll be there to help again.
Got it. Let's take a question from Rajesh Maheshwari. He's written to us on YouTube and he's talking about Dixon Technologies. He's already bought in the stock at 5,000 levels. He wants to know what's the outlook for this stock from a short to medium term perspective. So Nirav, tell us what are the charts showing on Dixon Technologies?
So this stock has witnessed a 2-year consolidation breakout above the 6,300 odd levels. And post that, there was a small little flag kind of a formation breakout which has come in. And definitely believe this stock is going higher up to the 7,200 odd levels. You can continue to hold this stock for the target of around 7,200. Now, the only thing one should do is, keep a stop loss around the 6450 odd level, which is a good support area. That should be a good stop loss as well.
Right, fair point. Next up, we have a question coming in on Coal India. Now, this one's from Pranav. We're seeing a downtick in the stock after yesterday's commentary from the management, and we saw the results also. The e-auction premium has come down. We need, from a longer term perspective, do you still remain constructive on Coal India?
Absolutely. So with the number of coal-fired plants being set up and the demand for coal going up, there is obviously going to be a shortage in peak power. So obviously that can only be met through Coal India's coal, and we expect volumes to remain robust, and there is steady pricing, and we also expect a little bit of operating leverage to come in because coal is also setting up its own power plants. And apart from this, the washing of coal also helps in improving the the profits margins. So I think coal is a good buy at current levels.
And from a technical standpoint, Nirav, how does Coal India look?
Technically, it looks very good. This stock has consolidated from 2011 onwards. And, this is the first time a 100% retracement has taken shape. And in fact, the stock also went above those important resistances of 450 odd. I definitely believe this stock has the legs to move up. No doubt, it is negative today. Also, some dividend has come in today, so that is why it is down. But I definitely believe one should continue to hold the stock, even buy it at current levels. It should move up quite significantly, like it has done in the last 6 months odd. I am looking at targets, medium-term targets of around 750, 800, and from a short-term perspective, definitely 550, 600 is achievable. So don't worry here. Probably another 3-4 days of consolidation or downtick, this stock should again regain strength and move up. So continue to invest in this stock.
Got it. Next up, we have a question from Sulochana from Visakhapatnam. Now, they're talking about Adani Wilmar shares. They've already bought in the stock in 2022 at 700 rupees. Yes, 700 rupees. We need, from a longer term perspective, what's your view on Adani Wilmar?
I think, the franchise is a very strong franchise, and to build such a franchise, it takes about 20 years. And the fact that the company operates primarily into the edible oil space, which is a large chunk of its business, there is bound to be some volatility. But with the government taking a lot of steps to ensure that, domestic volumes pick up and there is uniform, reduce the volatility to a large extent, I think Adani Wilmar, with its diversification into FMCG and other products, is well placed to buy from here. So I think, barring for the fact that the Adanis want to sell out, this stock is definitely at a interesting point, and it can continue to move up from.
Right. Just a standard disclosure here, NDTV Profit is part of Adani Group, and yeah, that's why you're watching the show. Now let's get into another questions. This one's on Roto Pump. Now, Nirav, I'll come to you on this one. This question is from Devang, and they've bought in the stock at 245 levels. Would you suggest holding on to it, and what are the key levels that you should watch out for?
This stock, I'm seeing a very good pattern develop here. Higher top, higher bottom formation is in place, and the volumes are also rising as the stock is rising. So that's a very good sign. I believe one can stay invested. You can in fact add more positions at current levels as well. You don't see any distribution that is happening. So yeah, it should again regain strength and move up above that 450 odd resistance zone. And up to that 550 600 levels, continue to stay on. The only real thing here is for you, keep a stop loss of about 380. Once 380 is broken below, there can be some negative bias for this stock, and about 320 odd can come, but I don't see it coming, probably breaking that 380 odd levels. But always have a stop loss with you while trading or investing.
Got it. Next up, we have a question from Krishna Kishore from Hyderabad, and they're talking about Shipping Corporation. Now, Vineet, recently we did a story on Shipping Corporation that talked about, we essentially valued the non-core assets of the company, and it turns out that the market value of these non-core assets, which will be demerged into SEILAL, is double the book value. Now, considering that, we have a Krishna who's bought the shares at 141 levels, and currently the stock is trading around 251. From a longer term perspective, what would you suggest, Krishna, to do with the Shipping Corporation of India? And I also want you to talk about the concerns around Red Sea as well, that is having an impact on freight costs.
Yeah, so first thing that I think is he should continue to hold on to this stock, because there is going to be substantial upside coming here. What are the reasons for driving this upside is the fact that India's EXIM business is going to go up very aggressively, because the country is trying to push merchandise from Made in India exports and Atmanirbhar Bharat. So that is number one. Number two is that, if you see the crisis which is there in the Red Sea, Indian Army has been very protective about its vessels, and they've taken some preemptive action. So that goes to show you that, our vessels are safe and secure. Third thing is that, it's obviously a conflagration, which is explosive situation, and prices are expected to stay firm, right? So this is, while this will help SCI build on the margins, it is going to impact the insurance cost. So, there will be a net minor gain for the company. But apart from that, I believe that longer term, the story looks very, very strong. And the government is hell bent on improving the efficiency and valuations of, the PSUs. So we believe that you should continue to hold for this purpose.
Understood. So it's a hold on Shipping Corporation of India. Next up, we have a question from PGK Raju, and he says he's retired from the central bank, and he's also holding the shares of central bank. He bought it at 60 levels. It's currently in the red today and trading around 66 levels. Nirav, what kind of levels should you watch out for in central bank? Should you continue holding on to it, because he's there's a marginal profit there?
Yeah. So, if he's holding on to the stock from a long time, this is the right time for the stock to perform and, give him good profits. This stock was in the snooze mode for, the longest time, probably 15 years. This stock has come down from 120 odd onwards. but the volume profile is very good. Now the stock is also doing a higher top, higher bottom formation. I believe this stock can go up towards those 85, 90 odd levels in the short term. So if it's looking from a short term perspective, that is your target. But from a medium term perspective, 100% retracement of around 120, 125 will come in the next 6 odd months. So definitely hold on to this stock. It will give you good profits. The stop loss here to be followed is around 56.
Got it. Understood. We'll slip into a short break now, but after the break, we'll take a lot of more of your questions. Stay tuned. Welcome back. You're watching Ask Profit. Without wasting any time, let's quickly jump into the questions. The first one's coming from Shambhunath from Kolkata, and they're talking about Deepak Nitrite. They've bought in the shares at 343 levels. Now, Vineet, Deepak Nitrite, we had the management also on today talking about the company and the fundamentals. If you can tell us what's the long-term view on this one, and should they continue holding on to the shares?
So, we believe that while, right now the chemical market outlook is not that hunky-dory, our reasoning is that Deepak Nitrite has been indulging in business which is, an import substitute. So the market for them is like a buyer's market which they service, and that provides them with a lot of volume security and the business security. Ultimately, what is going to drive the stock upward is a recovery in chemical prices, and we think that this should happen over the next few months, given the fact that we are in the fag end of a exhaustion of the chemical price decline. So we are quite constructive on the entire chemical industry, and we think there is more gain than pain from current levels. So we can continue to hold the stock.
Okay, fair point. Now, next question is from Nishant Patel on YouTube, and they're talking about Adani Energy, and they've bought the stock at 1,079 levels. And I'm not sure if they've mentioned. Yeah, this is from a mid to long term view. So, Vineet, this one's for you as well, Adani Energy. Should you continue holding on to it from the longer term? I know you've talked about the power sector on a whole, but specifically this one, would you remain constructive?
Yeah, absolutely. See, with the increasing number of renewable projects that come in, you need to put up new transmission lines and the entire infrastructure setup to vacate the power. And, that is where Adani Energy comes into play. In this, what happens is that, they get 30-year cash flows decided right at the beginning of the period when the contract is allotted. So there is some very strong cash flow accruing over 35 years. And, it's very difficult to replicate this kind of business after 35 years because of the uh, cost inflation for the infrastructure project. So what happens is they tend to get renewed with the existing players. So, these are like perpetual income for these stocks. So I believe that they have a very strong growth factor. They have been gaining almost 30 to 35% market share of the private sector projects which are rolled out, not including Power Grid in this perspective. And they've done really well. And we think that this stock is headed for another 50 to 60% upside from current levels over the next 2 to 3 years.
Okay, 50 to 60% upside in Adani Energy. Now, next up, we're talking about Time Technoplast. This one's from, I'm not sure if they mentioned the name, Hari. And they want to buy the stock, Nirav. Now, Time Technoplast, if you pull up the 1 year chart of this, it's a multi-bagger. It's given over 160% returns. Do you think there's more upside into the stock?
Oh, definitely. See, there is a period before 2020 and then there is a period after 2020. Before 2020, there was no volume whatsoever. Just look at the volumes this stock has managed after 2020. It's a totally different stock post that. And no doubt it has given multi-bagger returns because of the volume. The profile is superb. There's a V-shaped recovery for this stock, and this is on the verge of a multi-year breakout. The multi-year breakout level is around that 230 odd levels. Once it gives a closing about 230 levels, you will see this stock fire, all guns blazing. This stock can go up toward the 280, 300 odd levels. So definitely go ahead and look to buy. But above that 230 levels, once that breakout comes in, only then buy. You can keep a stop loss of around 210 for your longs post breakout.
Got it. Vineet, let's talk about the IT sector. This one's from John. They've bought in TCS at 4100 and Infosys at 1700. And we've seen a bit of a chop and churn in the IT sector. We saw US inflation kind of more than what was expected as well. What would you say to somebody who's holding on to a TCS or an Infi? From a longer term perspective, of course.
Obviously, so for me now, there is still a lot of, if you see technically there are breakouts, the stocks have hit new highs, and price action has been quite positive and investors have benefited. But going ahead, I am not very sure on what is going to be the outlook for this sector. Primarily due to a couple of things. One is the orientation towards AI, number one. Number two is, we believe that we are at the precipice of a possible fall in the dollar. When that will happen is anybody's guess. But that is an overhanging sword, and the risk of that to the entire business being based on arbitrage of labor, doesn't portend well for the outlook of the service providers. So as a policy, we are constructively negative on these stocks. So if you're a long-term holder, you must trade with very tight stop losses. And if you're in profits, don't let these trades get into a loss. If you're getting into a loss, you should be exiting them.
Okay. Nirav, do you have the same view on TCS and Infosys? And if you do give us the levels.
So, see, frankly speaking, these stocks have had their share of consolidation. And now TCS is one stock which has led the rally for the sector as a whole. And a rounding shape breakout has come in this stock. That breakout had come in around that 4,000 levels, which is being retested again. So once that retested is done in the next couple of weeks, you will see the stock moving up very swiftly. And I feel whatever wrong had to happen has happened technically. This stock can move up towards that 4,800 to 5,000 levels very swiftly, and the others as well. You look at the others like Infosys, Tech, Mahindra, HCL, Tech. Most of their consolidation period is over. Volumes have risen from the lows, and very importantly, a lot of shorts were in the system, which seem to have come out now. So covering has happened. So even for Infosys, for that matter, a small breakout has come in, and it has been retested as well. So 1650 is a very strong support area now. So this stock is headed towards 1850, 1900 levels very soon. So definitely a buy on dips kind of a stock where you've got dips today. Should be bought into with for Infosys 1640 will be the stop loss. And for TCS, the stop loss would be around the 3980 odd levels. So, both these stocks are a buy, and I believe the sector as a whole should see good upside.
All right, understood. Thank you so much, Nirav and Vineet. We're completely out of time, and thanks for joining in and for answering so many questions for us. And viewers, we'll be back tomorrow, same time at 11:30 a.m. If you were not able to take your questions today, we'll definitely try and take them up tomorrow. But stay tuned to NDTV Profit, lots more coming up on the other side.